Sluggish growth and plunging valuations also offer patient investors opportunities to buy undervalued stocks. China's economic recovery has been sluggish, and Chinese shares have suffered in tandem. Here are three of the most undervalued Chinese stocks for patient investors to buy. Baidu. Strong earnings growth and a generative AI competitor could create positive tailwinds for the company. JD.com. The e-commerce giant's shares have suffered from a sluggish growth outlook, but the business remains attractive. BYD. BYD is the largest EV manufacturer globally and has demonstrated robust quarter-to-quarter sales growth. Let's dive in. Here are the three most undervalued Chinese stocks to buy now. August 2023. Welcome to Timely Investment Research. China's economy has been struggling recently. After a tumultuous period battling the COVID-19 pandemic, the government abruptly abandoned its zero-COVID policy in December 2022 and reoriented the economy towards reopening. Unfortunately, China's rebound has largely underperformed expectations. There's been a pullback in consumer spending and bank lending. Chinese exports have also sputtered, but this is mostly the result of an overall slowdown in Western economies that buy Chinese goods. Without decisive policy measures to stimulate demand from the Communist Party of China, the world's second-largest economy could be headed for a period of deflation, which would have ripple effects across the world. Despite these obvious headwinds, there are still plenty of companies with good business models and cheap valuations that could benefit from China's economic reopening and the reprioritization of economic growth by the authorities. Here are three undervalued Chinese stocks that equity investors should buy in August. Number 1. Baidu. Baidu is the largest search engine and online advertising platform in China, with over 1.2 billion monthly active users and a market share of over 70%. The company operates via two business units, Baidu Core and iHUI. The former includes search-based advertising sales, cloud offerings, and autonomous driving initiatives. The latter is an online entertainment service which includes both original and licensed video content. The company also announced its generative AI competitor to ChatGPT, ErnieBot. In recent years, Baidu's share price has been negatively impacted by the regulatory crackdown on the internet sector, resulting in limited ability to acquire and invest in other companies. However, Baidu has been able to maintain its revenue growth and profitability while increasing its research and development spending. The company has also been expanding its presence in overseas markets, including Southeast Asia, Japan, and Brazil. The internet giant has recently benefited from the recovery of online advertising and consumer spending as China eased its COVID-19 restrictions. In May, Baidu posted a better-than-expected first-quarter earnings print off the back of the post-COVID recovery. Shares are up more than 20% year-to-date, and enterprise valuation is trading cheaply at 7.8x forward earnings before interest, taxes, depreciation, and amortization. Innovation and diversification into new sectors such as cloud computing, artificial intelligence, and electric vehicles, which have huge growth potential and competitive advantages, could catapult Baidu into new valuation heights. Number 2. JD.com. JD.com is one of the largest e-commerce platforms in China, with over 580 million active customers and a wide range of products and services. The company operates a substantial logistics network, which covers 99% of China's population and delivers over 90% of orders on the same or next day. JD.com also has a diversified revenue stream from its cloud computing, healthcare, fintech, and social e-commerce segments. JD.com's stock price was also dragged down by the regulatory crackdown on the internet sector. However, JD.com has been relatively less affected by the antitrust probes and data security issues, as it focuses more on customer service and quality than on market dominance and user traffic. The company has also been proactive in complying with the regulators' requirements and improving its corporate governance. Shares in JD.com have vastly underperformed this year, mostly due to a potential price war with competitors and a murky growth outlook. There were reports the company would spend around $1.5 billion to keep prices on its platform low, and investors remain skeptical about this strategy as it could negatively impact the company's margins in the short run. China's slowed recovery has also made investors skittish on JD.com's near-term growth prospects. However, for patient investors, this could be a great opportunity to invest. Shares are trading at only 7.2x forward earnings before interest, taxes, depreciation, and amortization. China's recovery may appear sluggish, but as the economy recovers, so will JD.com's e-commerce business. Number 3. BYD Company. BYD Co. has earned another spot on one of my lists, and for good reason. The EV maker has garnered a number of achievements recently. In tandem with having an undisputed market position in China, the EV maker has also become the world's top EV maker this year. BYD has diversified its business into not only manufacturing electric vehicles, but also supplying the batteries that power them. The automaker became a key player in the battery market, ousting LG as the world's number 2 EV battery supplier. BYD's stock price has performed well year to date, with shares having risen more than 30%. The rally has been a result of the company consistently growing its sales volume and market share in both domestic and international markets, thanks to its technological innovation, product quality, and brand reputation. The company has also been improving its profitability and cash flow generation, trading relatively cheaply compared to peers like Tesla. Investors who decide to bet on BYD now could stand to benefit from the strong, secular tailwinds in the broader EV industry. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.